In 2018, Barbados entered into an International Monetary Fund program under the Extended Fund Facility. The loan agreement was intended to help the island restore debt sustainability, strengthen its external position, and improve growth prospects. Last week, Barbados' program with the Washington-based financial institution came to an end, and already, the government of Barbados has reached a new staff-level agreement with the IMF for a Resilience and Sustainability Trust program with an accompanying extended fund facility. In this episode of In the Know, Senior Economic Advisor to the Barbados Government Dr. Greenidge shares what this new agreement means for Barbadians, potential job losses, primary targets, and from an environmental and infrastructural perspective, plans to build out Barbados' resilience against climate change. I'm Krystal Hoyte, and this is In the Know. Dr. Greenidge, thanks for joining us. Let's jump right into it. The main question Barbadians will have regarding this new International Monetary Fund agreement is simply what it means. At a time when cost of living is high at the supermarket, at the pump, and even with utilities, what will this new agreement mean for the average Barbadian?
Krystal, thanks for having me. In a nutshell, what it means is that the IMF, once again, has come and said to Barbados that they're endorsing our BERT program. We've developed over the last couple of months BERT 2022. BERT 2022 is a revised version of BERT 2018. And BERT 2022 is revised in such a manner to take into account the new realities. The fact we're now coming out of COVID and we had a pause on our structural reforms, and therefore we need to start back those in terms of the SOEs. The fact that we have higher prices in terms of, although things are coming down a bit, in terms of higher cost of living, accentuated by the Ukraine-Russia war and the supply shocks, taking considering that. The fact that we now have to get an emphasis on a stronger growth trajectory going forward. We put all of that in the BERT 2022. But what I want people to understand clearly is that now with the IMF coming in, they have looked at that program and said they can support that program with the EFF and the RSF, as you say. EFF, Extended Funds Facility, similar to what we had before, but now we have another dimension, another component to it, which is the RSF, Resilient Sustainability Fund. And they brought those to the table, financial arrangement to support the BERT program. What it means is that now government have cheaper, really cheap financing to execute its BERT program, which is designed to deal with the things that you just mentioned to me, which is dealing with the cost of living, dealing with the absence, with the need to get growth, dealing with the need to recover from the COVID, dealing with the need to reform the pension system and to recapitalize NIS. These things now are supported by the IMF program.
I want to interject there. You spoke about cheap financing. When government says it is getting a better interest rate from the IMF, what is the rate compared to the market at this time?
Well, it's no comparison. The IMF money is probably like 1%, 1.5%. Now, if we had to go to the market, our bonds are now trading, some of our bonds are trading at 6.5 and 6.25%. So we would probably be paying between 6, 7, or even 8% if we go directly to the international market now. And that makes a significant difference to your bond portfolio and your ability to repay. It will put more pressure.
Understood. Now, beyond the extended fund facility, you've mentioned the RST. Barbados is the first country to access funding from the Resilience and Sustainability Trust to help build resilience against climate change. Tell us more about that.
This is a very exciting area because this is perhaps one of the only instrument out there for countries like Barbados, middle-income countries, high-income developing countries, who are still small, very vulnerable to many shocks, but not low-income that they get concessional financing from the World Bank or anyone else. So, and they're not high enough in terms of income not to need it, but they're very vulnerable. So the IMF came up, and our Prime Minister is one of the chief advocates for this at the international arena has been asking and advocating for this. And so the IMF responded with what you just call the Resilient Sustainability Trust to support government's policy, any country who have a policy, a climate policy program to build resilience to the climate crisis, right? That money, because building resilience is not, the climate crisis is not sexy and fancy. No private investor wants to do that. Like, the return for those are over time. It's not immediate. It's not like building a hotel, right? You want to do pipes, you want to do a roof-to-roof program, you want to build up the infrastructure, you probably want to put your utilities on the ground, those sort of things. That money has a maturity of 20 years. So you have a 20-year money, and you don't start paying back to 10 and a half years. So there's a grace period of 10 and a half years, in which you don't have to pay back, and you start paying back after that. And again, that's also a very low interest rate, somewhere between 1 and 1.5%, or but 1%. So again, cheap money, very long-term money, give you the breathing space, the elbow room in terms of your fiscal space to allow you to do what you need to do in terms of building infrastructure.
So, 2 programs, and I'm sure Barbadians want to know the numbers.
How much it is? And let me just tell you numbers because I've been up most nights, so I don't remember the exact number. But the interesting one is the Resilient Trust is 150% of quota. It ranges from 75% to 150%. Countries that get 150% of quota have to show a strong, really strong climate resilient policy program that they are planning to make. If they do that, they get 150%. We have gotten 150% because of our strong climate resilience program, roof to roof, all the things the government has in the BERT 2022. But in addition to that, the amount we're getting and the fact that we are the first to go spells volumes. Not only the Prime Minister being a champion out there and advocating not for Barbados, for developing countries, small island developing countries in Caribbean, in Africa and Asia Pacific regions who say don't have access to climate change financing. And for her to be advocating that the IMF to respond, and that Barbados is already in a position to already have strong policies to support such a claim, speaks volumes for the kind of program. And at the front is saying, well, look, we give you the maximum we can give you. Prime Minister has said before, and it is true that because you are small, 100% of a small is still a small amount. 100% of a big country is a big amount. But we still got to do the work. So 100%, you would like more, but that will be maximum you can get. Let me tell you the numbers. Having said that, the number, so the 150% of quota ends up to be 42 million SDRs. Remember, SDRs is the currency of the IMF. Now, when you convert that into US dollars, it's about 183 million US dollars. And the Extended Funds Facility is 90% of quota. And when you convert that, that is 85 million SDRs, about 110 million. Now, when you add the two of them, then will come what, 293 million. Now, something I must explain. The IMF lines in SDRs, okay? So when we get the money, all the time we get it, because it's different disbursement, the relevant SDR rate would apply. So it may not, I say this because you've heard the Prime Minister say before about 300 or something we were looking to get. We got the same amount of quotas we expect, but between when Prime Minister spoke to the public and now, the SDR's conversion rate to USA fall because the SDR is a weighted of 5 currencies, including Europe. And you know Europe collapsed in terms of their dollar. Converts in less than what Prime Minister have announced previously before we start negotiation. But we got exactly the same quota, just the rate is different in that regard.
Can you share the primary targets under the Extended Fund Facility?
Well, Krystal, you've been at this for a while. I mean, you know the previous program. We've talked about the previous program many times, and you know it comes out of the BERT program. There's no difference now. Under our BERT 2022, we have laid out the macro framework. In other words, the fiscal projections, what we expect for growth and everything. And we take those fiscal projections and break them down into our targets, which now in discussion with IMF, they've adopted under their program. So for this year, we're going to be running a primary surplus of 2%.
Down from 6%.
From 6. And next year, we're going to creep up to about 3.5, and then we're going to about 4, and we're going to have off around there. First of all, it gives you more space to do your infrastructure, to spend money, bigger room to spend in terms of building the economy, but you still have to run primary surpluses to pay down your debt and keep it on a downward trajectory. There's something you need to clarify and say, because many persons comment about primary surplus, you're talking a lot. But what the average person needs to understand, there are two balances that you monitor. Is the primary and the overall. So when the government of Barbados runs a primary surplus now, I don't want to get too technical, let me explain. A primary surplus is the difference between your revenues and your expenditures, excluding where you got to pay interest payment on your debt. So that's primary. But you still got to find money to pay the interest payments on your debt. So even though government is running a primary surplus of 2% this year, right? Overall balance, now you put in your interest payments, is 2% deficit. So government is indeed running a small deficit. But any macroeconomics textbook on any good economy to tell you, in a developing country, a small deficit is good because you need to run a small deficit to develop. You heard Prime Minister say that, I remember it's Barbados, so we call it deficit financing, deficit development, because they run a small balance. So don't get carried away. In fact, you run a primary surplus that is needed, but you still got overall balance. So next year, then you go from the primary surplus of 2% to 3%, 3.5%, your overall is going to be 1% of GDP. It's a deficit. And that's because you're developing. But you're running a primary surplus, so you're paying down on the stock. Do you mean? And then you pick up. So that path allow us to have a capital expenditure path. And Krystal, like I start by saying, you notice you monitor the program before. And you know what drives the economy is what? Capital spending. All the talk we do, if you don't invest in capital spending, in projects, in building the roads and different things, that's capital spending, the economy won't grow. So we have built in last year, fiscal year, the capital project spending went up to 4.5%. In previous 10 years, it was 1 to 1.5%. We significantly increased that. And with this primary path, we're now allowing enough space so that we can build out the economy. So it gives you wiggle room to build the economy. That's the primary target under the IMF would have taken from the BERT program and incorporate into what we will call conditionality. The other important one is that usual stuff that you cannot accumulate any more arrears. And we have paid down arrears in the last program from 1.9 to under 100 million. Although, you heard Prime Minister say, we just discovered in the old tenants legacy system about 200 million in arrears. Now we add that, so the stock is about 300 now, and we will pay that down gradually. So it will not increase. So those are the usual targets you'll find.
Coming up, the question must be asked. Can job losses be expected? Stay with us. Obviously, we want to know, are job losses on the table?
Under the BERT 2022 program, Krystal, there's a growth program, a program to get the economy growing. We would expect to see unemployment falling, not increasing. We would not expect the people to be losing jobs, but gaining jobs in these sectors, in new economy sectors, blue economy, whatever. Now, I think what you may also be referring to, though, is that part of the program, we have to continue the reforms of the SOEs that we started prior to the COVID and had to pause. And because of that, there could be this job displacement, like unavoidably. But what I would say to you is that, one, if that is the case, those persons can expect to find, economy growing, to find other areas that they can be absorbed. But more importantly, the government is putting in place what we call gateway programs. You see, with the asphalt workers and beautification workers who are fitting, we are now have a program where they are transitioning into other areas. Scotland District, we're building the roads there. Well, government building the roads, and those persons are already targeted and finding work there. So while they make displacement, because you have to do what you got to do to make some of the SOEs even efficient and improve the delivery of service, there may be displacement. But the other thing you mentioned, Krystal, too, is that part of the BERT 2022 program focuses in terms of restructuring the SOEs on enfranchising the workers. So let's say a particular SOE, for example, may have workers and that SOE provide a service to the public. In the restructuring, it may be such, as again efficiently, that some of those services can now be transferred to the private sector, and the same workers can be empowered and facilitated that they now start to provide these services back to the SOE. And now they're enfranchising in power and earning their own keep. So that sort of program is what you're thinking. It's not like, oh, no, cut you off and you go. No. We have a program, which is a gateway program, to reintegrate people into other jobs and other areas, but they focus in, as we said before at the beginning, remember the phrase retool, retrain, empower, and enfranchise, right? And that hasn't changed. And therefore, wherever we have to do work, BMC, CBC, wherever, it's going to be the focus.
When we return, we take a look at Barbados' debt to GDP ratio. Looking at the figures, Dr. Greenidge, what will Barbados' debt ratio be as a consequence of borrowing?
Our debt ratio now is about, at the end of July, was 125%, roughly, of GDP. Remember, down from 176.3. We have it projected to continue to decline, maybe 120 this year, into medium term to reach 160. It will continue on that path. Why? Because even though you're borrowing, you are returning debt. And the gap is negative. Explain to me. Persons ask, me on the radio, how much the government borrowed over the BERT program last time? Government borrowed 2.5 billion. Oh, that's a lot of money. Yes, it is. But you know how much it paid off? 3.7 billion. In other words, you borrow, but you pay out more than you borrow. So that's why even though under the IMF program, we will be borrowing money, and other development partners who know, because of the fact that the IMF endorsed a second program to support the BERT, our developmental partners, IDB especially, is now stepping and saying we want even more than we were paying before. God, this spells confidence. I should mention you too, S&P just reaffirm our positive rating. So, this is confidence in the economy and confidence in the fact that the government is doing what it said it will do. Now, all that means, so even though you borrow, our debt profile will be paying off more than we borrow to keep it on that trajectory down. And the other thing that goes into ratios, Krystal, I don't have to tell you, know this too, is the GDP, the size of the economy. So as the base economy expands, that ratio comes down naturally. Remember I said that before, and persons will ask me, like, Kev, you concerned about that? I said, I'm not concerned about that. Yes, it went back up. It came down to 118 or so percent prior to COVID. It went back to 140 something.
144%.
After COVID. Yes, are you concerned? And what was my response, Krystal? I am not concerned. As long as the economy start to grow, the reason why we're at is not because government borrow a lot, because the base contracted. And so as the base expands, as we get growth on the BERT 2022, that ratio also fall. So it is the combination of borrowing less in the net, plus the growth of the economy, plus the fact that borrowing at low interest rates will keep your debt on a stable trajectory.
And based on that, Dr. Greenidge, how much of Barbados' revenue will now be going towards repayment of loans?
Good question. Prior to in the beginning of the BERT program, 2018, because when we got another BERT, you got to call one BERT 1 or BERT 2. So let's call it 2018 and 2022. For BERT 2018, the beginning of BERT 2018, we were paying 68 cents on the dollar prior to restructuring. It came down to 22 cents on the dollar prior to COVID. So out of every tax dollar, 22 cents not going. I mean, if you're paying 22 cents there, that's what? 78 cents remaining to do the other things. And you saw things happen on that, right? Because of COVID, they had increased spending, and remember we lost a lot of revenue, 600 million in the first year, 400 million in the second year, so the revenue intake shrank. So obviously this debt service shrank. So that 22 cents on the dollar went back at about 30 cents on the dollar. And in fact, now that we need to grow back the economy, continue doing what we were hover around 28 to 30 cents on the dollar going out as the economy pick up. 28 cents on the dollar, debt service is a manageable and a good ratio to be at.
And finally, Dr. Greenidge, what are the priority areas on which the money will be spent and the expected economic growth over the next few years? Projections.
Krystal, I want to encourage everyone to get a copy of BERT 2022, the revised program, and see what the priorities are and what we put in there. It's built heavily around getting growth. We are aiming to increase our growth trajectory. Before you talk about really increase it, you have to know where it used to be. Our growth trajectory averaged about, before 2008, between 1993 and 2008, when we had 12 years or 14 years of growth, we were growing on average 3% real growth, right? Then between 2008 and 2018, we haven't grown any because of all the different issues we know about. We believe that the economy can go back to 3% and go beyond that. In fact, we are pushing anywhere between 4 and 5%. We would love to get 5% growth, and we can get it. We can get it, and on a number of factors. So the BERT 2022 builds in a path that take us back up to close to 5%. It's going to require significant investment from government in terms of boosting government-owned public investment program, which I spoke to you, that we designed the fiscal to give enough space for that. But it also require us to step up, but us meaning Barbadians, to step up and invest in our own country. We need private sector investment to step up. We need foreign investment too, but we need to get the private investment going. During that year, we had 3%. You had things like World Cup cricket, the stadium that Kensington was built. It is the building out and different infrastructure that gives you the growth. Not only that, the BERT 2022 not only talks about building out in terms of key projects, etc. It talks about Barbados becoming a logistic hub, where we now will be the logistic hub in terms, for example, food terminal in the Caribbean. It talks about building linkage between Africa and Barbados in terms of travel and cargo. It talks things like moving and pushing the renewable energy space and investing in that, and how government can be enabled doing it. So there are many priorities. In fact, BERT 2022 have 7 growth pillars. I can't go through all of them here, but it's suffice to say that the focus is to get growth. And for that, we need government to continue its trend and keep up its investment ratio in terms of public investment, given them what fiscal space. But we need people who have to start to invest in solar projects, to start to invest in food security, to start to invest in tourism, and not sit back and look and say, well, let's see what's going on. But really, we're going to need a lot of private investment to get it going. But those are the priorities in terms of the new BERT 2022 program.
Insightful. Dr. Greenidge, thank you for making the time.
Thank you, Krystal, for having me. And as always, I appreciate the opportunity to be able to speak to the public. As with the BERT 2018 and the IMF program, public consultation and keeping everyone involved in what's going on and what helped us to be successful. And BERT 2022, with the support of the IMF, cannot be successful unless every Bajan, all of us, really own it. And that's my role, to help people understand what's going on, to walk through the weeds. So anytime is a pleasure.